Welcome back, and Carl's back too from the business desk. Hello again, Carl.
Hello again.
Now it seems the business world rocked by one scandal after another.
That's right, and let's start with just one of the scandals, and it's being called the biggest insider trading scheme ever. And this involves a hedge fund group called SAC, a very massive and influential hedge fund. And Matthew Martoma was working with SAC when he got insider information about doctors working at a pharmaceutical company and caught wind of the fact that some of the drugs they were working on weren't going to plan. And so as the stocks were bound to fall, he pulled out and avoided losses and made the company hundreds of millions of dollars. Will Hildebrandt has this.
Bepinuzumab, a drug to combat Alzheimer's disease, but at the heart of the largest insider trading scandal in U.S. history. Matthew Martoma was charged with using confidential information about the experimental drug to help his firm gain big profits instead of massive losses.
Former portfolio manager Matthew Martoma and his hedge fund benefited from what might be the most lucrative inside tip of all time, allegedly resulting in an illegal windfall to the hedge fund of more than $250 million, and that's billion with a B.
It all started back in 2006. Drug companies Elon and Wyeth were jointly testing a new Alzheimer's drug, Bepinuzumab. At the time, Martoma worked for the hedge fund CR Intrinsics, and he also advised another, SAC Capital. In October, Martoma met a doctor involved in the drug trial and over a period of time received confidential information. As of March 2008, the funds anticipated positive news from the drug trial, but they pulled out in July when they learned of the negative results. In just over a week's time, the hedge fund sold more than $960 million in Elon and Wyeth securities, resulting in illicit profits and avoided losses of more than $276 million. The case is just one of many being run by an FBI project called Operation Perfect Hedge. The 5-year investigation focuses on insider trading on Wall Street and has already resulted in well over 50 convictions.
And as we heard there, Martoma is one of about 5 people at SAC alone to have been brought to justice as a result of insider trading. Of course, SAC is not the only company. The FBI investigation that resulted in Martoma's woes actually launched an investigation that resulted in more than 50 convictions, all to do with insider trading, but of course not all in the same company. A number of other companies getting caught in the net.
Now we're moving on to Hewlett-Packard, because of course it's having trouble of its own with revelations of accounting irregularities in the company it acquired about a year ago, Autonomy.
That's right. Its troubles do stem from its acquisition of Autonomy, and the problem here is that they say Autonomy was hiding its losses. HP says that it's launched an investigation into how it is that Autonomy seemed to be a lot more profitable than it ended up being, and as a result of these revelations, HP's stock has slid to a 10-year low. It's dropped 12% to $11.71. And shares are down nearly 50% year on year. And as a result of all of this, HP took a number of charges, $5 billion in charges tied to the problems with Autonomy, but a total, as a result of other problems that it's going through, it's had a whole year of decline, $8.8 billion in charges in total. And so HP, as I said, is launching an investigation into Autonomy in particular, and it's referred the matter to the U.S. Securities and Exchanges Commission.
So accounting regularities, earlier you were telling us about fraud, and now you're going to tell us about another trader falling from grace.
Yes, yet another saga, this one involving UBS rogue trader Kweku Adoboli. He was given a 7-year jail sentence yesterday, Tuesday. That's after he was convicted of 2 counts of fraud, resulting in the Swiss bank losing $2.3 billion. Prosecutors say he's abused his position and he gambled the bank's money to increase his bonuses and his status within the bank. Adoboli has already been in prison for a year, and he'll spend about another 2.5 in jail.
And how the market's reacting to all of this?
Well, it would seem the markets aren't that bothered at all. They have been relatively flat. The American markets, the US markets there, we can see that even up a bit if we look at the NASDAQ and the S&P. And the Asian markets also, we can see there, bit up there, and we could say they're positively sanguine, perhaps oblivious to the news of all of these scandals. It's not rocked them in the slightest.
Moving on to Greece's ongoing woes, and it seems it's not going to be getting the money it was hoping to get this week.
That's right. The delegates from the IMF and from the Eurozone were up into the wee hours trying to negotiate some kind of deal that would allow Greece to extend the date by which it had to pay back its loans and reduce its deficit. And what happened was basically they've kicked the can down the road one more time. They couldn't reach an agreement, and as a result, Greece will have to wait yet again for the latest tranche of aid that the government has said that it's going to run out of money any day now. In fact, it was supposed to have happened last week, so we can only imagine how they're going to get by in the coming days.
So as we've been seeing, delegates and donors have been debating the Eurozone woes for years, but what do the people living in the EU feel about it all? Let's take a listen.
I think we've more or less had enough of austerity, to be honest with you. I think that we could probably do with investing in large projects. I mean, there's always talk of another airport or something like that, which would employ people.
British people really would like to leave the EU, even if we don't know what happens after this. I think that we haven't really seen personally the benefits of this structure.
I think we've been getting money for a long time, so now it's our time to give. But the contribution Spain is making to the European Union shouldn't be so aggressive.
I can see two sides of Europe, one with Spain and Greece, and another for the rest. We belong to the European Union, but it's only a facade, because the level of austerity we're having to impose proves otherwise.
And over in the US, things aren't looking much better, are they?
No, we've been hearing about the so-called fiscal cliff. That's obviously the combination of tax cuts and cuts in spending, rather, and rise in taxes. And they're due to take place in January if there's no agreement between US President Barack Obama and the U.S. Congress. And so the U.S. Federal Reserve Chairman Ben Bernanke has said there is not really a lot the Fed can do if Congress and the President don't come up with an agreement. So it's time for them to get to work.
In the worst case scenario where the economy goes off the broad fiscal cliff, the largest fiscal cliff, which according to the CBO and to our own analysis would throw the economy into recession, I don't think the Fed has the tools to offset that.
And we end on a much lighter note. You're going to tell us about chocolate.
That's right. Well, it's coming up to Christmas, and if we weren't addicted already, well, chocolate's even more important at this time of year. And the Global Cocoa Forum is taking place right now in Ivory Coast. They're going to make sure that the supplies are going to come up and meet a surging demand.
The world is hungrier than ever for cocoa, and the industry is struggling to keep up with demand. But fear not, chocolate lovers, producers of its key ingredient won't let your cravings go unanswered. For the first time, thousands of cocoa stakeholders put their heads together as the industry faces unprecedented pressures.
If we don't take action now, within a few years, chocolate could become a luxury item, and we will have a decline in the cocoa sector, which could last several generations.
Demand for the sweet stuff has exploded in emerging countries such as China and India, and producers have struggled to keep up. The bulk of the world's cocoa growers are in Africa, but aging orchards are not being replaced, while the younger generation are turning their back on the industry. A possible factor for this could be that despite growing demand, global cocoa prices have been declining, falling to record lows of under $3,000 a tonne. A major concern for Ivory Coast. The conference host country is the world's biggest producer of the beans, and cocoa makes up 40% of its export revenue.
The major challenges we face are those related to consumption, which call for a lasting transformation itself based on sustainable cocoa production.
But it remains to be seen if the conference will come up with solutions for a sustainable future and keep the ever-growing number of chocolate addicts happy.
That's it for business. Thanks, Kyle. Do stay tuned to France 24.